All right. Hey, good morning, and thank you for joining live. And I appreciate always when people join us at 7:30. It's great. Otherwise, I'm grateful if you're watching this online. Um, that viewership continues to grow, and more people tend to watch it each week. So we're thankful for that. All right. So um, let me jump through the bearish things first. Okay. The crop is huge, right? Uh, I've been chatting with farmers all over the country, and every one of them says they have good crops. I have yet to have one tell me that they have a record crop anywhere from Ohio, Illinois, Indiana, Minnesota, North Dakota, South Dakota. Not one farmer has confessed that they've had a record yield. Now, not one has said it's a bad yield, but not one has claimed to have a record. They've been second, third, fourth largest crops that they've ever had. But the USDA says that we have nearly the largest crops that we've ever had. So that's clearly bearish, right? Second thing that's pretty bearish is the lack of export demand. We've had some purchases from China in the last few days, or in the last week or so, but they haven't been at the scale that the market probably wants. And so there's this perception out there that means that China doesn't want any of the grain that we have. So that's bearish. Another bearish factor is that the Ukrainian government is increasing their export tariffs instead of decreasing them for wheat. So they're saying, hey, we have more exportable wheat available to the market than what we previously thought we'd have. And that's to the tune of about 300 million bushels. I don't have that exact number written down. I did write it somewhere, but I can't find my notes. Okay, so that's bearish. The next bearish thing is the South American crop size. They're planting corn and soybeans down there, and they have a great planting window. It's going in the ground fast. They're planting tons of acres, and the weather looks, depending who you talk to, maybe it's threatening, maybe it's not. So I think you have to go with they're going to grow a really big crop, and the USDA certainly has that pegged into our balance sheet as well. So South American weather is really good. Their planting is really good. Chinese demand is stinky and terrible. Ukraine is raising export tariffs on wheat, and we're harvesting the largest crop according to the USDA, or the top two in history. And yet we're seeing basis levels across the country exceed levels that we were at 1 year ago. And I know we've been bulled up for a long time, but let's go back to a year ago when things were just, pardon my French, but they were just total dog shit, right? COVID was there. Everything was falling apart 1 year ago. So to say that basis levels are much stronger, and I'm not talking a little stronger, I'm talking we're at the top end of the ranges on basis levels everywhere we're looking, and that's both for corn and beans. So you've got ethanol crush margins that are just ragingly high. You've got soybean crush margins that are in excess of $2 a bushel. You've got all this stuff that's really bullish on our interior happening in the face of what I think should be overwhelmingly bearish fundamentals. The lack of buying, the lack of exports, the huge crops coming, high prices cure high prices. All that stuff is just echoing in the back of your mind, but yet that's not what we're seeing take place. We've seen energy prices explode all over the world. Now they've pulled back a little bit in the last couple of days, but that inflation type mindset is still very, very prevalent. And I think it's very real and something that should not be muted. So on the bullish side of the fundamentals, okay, in addition to the basis, I think one fact really rings louder than any other, which is that in September, China took more feed grain than they've ever taken in history in September. Now, does that make sense for a country that says that they have plenty of food, that they need to shut down their, that they're shutting off soybean crush facilities because they just don't need it? They don't have the demand. Nothing about that makes any sense. So with China, remember, look at what they do, not what they say, because their import pace is ticking up, not down from a year ago levels. Now, we have not seen that manifest itself in our market yet, but as they deplete the world of its residual supply, that eventually comes back to here. So now I'm going to turn to the charts here, and what I've got in front of you are 4 charts, okay? So stick with me here. I'm not going to try to give you a headache, but I want to dig into this just a little bit, because if you've followed me for a long time and talked to us regularly, we're looking for alignment across indicators and time frames, okay? And when that alignment exists, it tends to really be powerful and reinforcing of a directional trend, okay? So here is a weekly chart over here. This big chart over here is a daily chart, okay? So weekly, time frame 1, daily, time frame 2. The 4-hour chart is time frame 3, and the 1-hour chart is time frame 4. We're looking for a story. We're looking for something that says, hey, we're all aligned, right? And understand this time frame analysis. In order to move a weekly chart higher, you must first do it on the daily, which must first happen on the 4-hour, which must first happen on the hourly, okay? So when we're disjointed, it means that the market gets really, really choppy, and I want to show you exactly what I mean. So I'm gonna slide this out and make it bigger. So this is your weekly chart, okay? And remember, our base trends happen when we're above the clouds. When we're trading above a cloud, we're bullish. And when we're trading above a cloud and we're trading above where we were 26 weeks ago, which is this lagging indicator here, and we're in a bullish wave count. I don't talk a lot about wave counts, but I like them. And when we're looking at our oscillators, what we're looking for is are the whispers that this market's telling us. We know we're holding above the cloud. We know we're holding above where we were 26 weeks ago, and we know that this oscillator on the weekly chart is in a buy signal. Now, yes, we've been in this nasty, horrible sideways trend, but it is completely overlapping, right? This market has found support near $5 every time it's come down to test it. So on this longer term chart, we're still bullishly biased. And when our weekly chart is bullishly biased, that permeates all the way through our analysis, okay? Not because we're reckless or anything like that, but because it's holding above the cloud. That simple. Now, when you look at the daily chart, you can see the disjointedness right here. You can see that we're above the cloud on the weekly, but we've been below it on the daily. That's out of alignment. That's out of whack. So we've known that this has been a counter trend pullback for quite some time. So if I take this chart out, here's the peak, here's this big nasty sideways chopping, whatever it is, it's chopped a lot of people up. But look what's happening yesterday and today. We're starting to zero in, and we're starting to come back inside this cloud. So we've seen it happen now across, we've been disjointed. We've been above it on the weekly. We've been below it on the daily. And on the 4-hour, we've been completely disjointed for this whole period of time. We've been above and below and above and below. Really difficult to get a read out of it. But here we are coming out of it yesterday, right? We came up through it, and we've tested kind of the backside of it. So that's fallen in line with the weekly chart. And this hourly chart, this is from the low scored right down here last week at 507. This is from the low scored at 507. It's been very impulsive. It's been very steadily bought. It's been very, very consistent. So the 1 hour chart is confirming that this is a short-term uptrend, which is now being confirmed by our intermediate, which is starting to be confirmed by the daily. Now, all of that's in line and consistent with what we've been looking at on the weekly chart. And we've been talking about this for weeks, that we want to see the weekly chart hold this setup and hold above where we were 26 weeks ago. I'm going to be the first to admit that it's been awful to sit through, and it's been choppy. But we got to stay true to what we believe, which is everything in our system is now starting to click back into alignment, okay? Never once in this whole downward move did we ever hit alignment to the downside, which is why we haven't been wanting to get super short this market, because it's just not given us enough damage on these charts to do it. And then when we start to overlay the fundamentals that we just talked about, okay? If we're going to break this market and we can't do it with a yield of 51 and a yield of 176 on corn, I don't know what's going to break it, because those are just gigantic crops. When we look out at March, even better. Let me get this pulled up here just a second. Clean this chart up just a bit and put the cloud over here. March is even better alignment. Okay, March is a little bit stronger. And then we look at DEES 22, and it is strongest yet. DEES 22 is way above its cloud. You know, pull back and look at this weekly chart. Look at this underlying buying support on the forward curve of corn. We're way above where we were 26 weeks ago. We're sitting here holding way above. Every dip has been bought. So yeah, we've been more bearish in the nearby, but our deferreds are actually starting to pull away, which will support the nearby trade as well. So look out to March, look out to DEES, and look at where we are here. And everything is telling me here that we need to hold our position as long as possible, because something's unfolding in the corn market that I don't think we fully understand yet. So I'm not going to beat this horse any harder today, but we may run into some resistance. That's what it means when you're inside of a cloud, and a daily cloud is a pretty powerful deal. So we may run into some resistance near the top side of it in that psychological 550 range. But I think a pullback to the bottom side of that cloud is something that's got to be bought, because the setup is too powerful for it to not take that risk. So I think you got to stay consistent. You got to stay true to what these things are telling us, and to what we understand the fundamentals to be. So I think corn is actually looking pretty good. So let's do the same thing here on soybeans. Okay, we'll start with SX21. Okay, so here's our soybeans: weekly, daily, 4 hour, 1 hour. And if you can look, you can see the weekly jump right up at you, right? We've been chewing our fingernails here, getting pretty nervous. We did dip below where we were 26 weeks ago. Did not like that at all. Our RSI, though, has never gotten oversold, which has been a really nice support. We've never taken out this low back here. We tied it, but we never took it out at 1184. And now we seem to be finding some strength above this cloud, okay? So as the daily chart pulls itself together on soybeans, which is a hold on. Okay, there we go. Sorry. Okay, so if we look at our daily, same thing that we've seen in corn. This big sideways move has been choppy. It's been excruciating to sit through, and it's been in conflict with what our weekly chart has been telling us, okay? And look at the setup that we have. We have the same setup. The hourly chart has moved higher. We've confirmed it. We've now broken through on our 4 hour, and we're starting to tick higher on our daily. We've got a little bit more work to do on beans, but that resistance zone on beans, the same as corn, is up in this 12, let's call it 1260 to 1290 level. And I want to get out to March so that you can see what that looks like, because that's the market that we need to be looking at. March is stronger. Notice that the weekly didn't quite touch the top of the cloud in March, right? Everything about the forward curves is stronger than what it probably should be given where we're at. So that can be because of some unknown and unseen fundamental shift that we haven't that's not made itself known in the market yet. It could be because we've just added weather premium, or for some reason we need to add some premium out into the forward that we don't know about, and that we're trying to encourage some storage. Last thing I'm going to talk about is the fact that on corn and beans is the fact that inputs are screaming higher. Everything, all of the inputs continue to move. Now I know that the market doesn't necessarily care about its break-evens. I get that, and it doesn't, right? Just because the break-even of corn is increasing, that the market doesn't care, except for a period of time when it needs to encourage planting. So there's a window when that cost structure really does start to matter, because corn needs to secure acres. Now, I think that the news and the chatter is going to be a lot noisier than what is probably really going to be impactful there, but it should provide some lift, because those fundamentals are definitely not bearish. Okay, now last chart that we'll look at is Kansas City wheat. I know everybody's concerned about what to do with wheat, and I think the answer is hold it. Don't take any action with wheat yet. We have no reason to think that that we're not going to break on out to higher prices here. So we talked about this last week. The corn and wheat spread is getting up into the upper atmosphere of where it likes to get. But the wheat fundamentals and story continues to get stronger, not weaker. And so I think a lot of the traders are looking at, oh, well, we should sell wheat and buy corn. I think what you want to do is own corn and own wheat, because that spread can keep getting higher if things get nutty. What will cause that? Well, it's the fact that we've been feeding so much of it. It put itself in the feed ration. Guys got bought out through August, and those numbers haven't really hit the radar yet. China's been feeding more than they're letting on. They've been importing. The wheat story is becoming more and more real all the time. So if inflation does kick back in, then this spread can get nutty again and can work itself higher. So not bearish the spread yet, and definitely not bearish wheat. So I think you got to stay true to what we've been looking at for the last several weeks. Okay, that is what I've got for you this week. I know that's a lot of information, but basically the alignment's coming back into where we thought it should be all along, and the fundamentals haven't shifted enough that we know of to recognize or to identify a major trend shift in the corn market. So I think we got to stick to our long side, and we got to keep we got to stay true to who we are. There is significant risk trading futures and options. If you have any questions, please call, and we will talk to you next week.